What's up, everybody? Steve here. Insurance rates are skyrocketing across the United States. And this is the reason why I had to bring in an insurance expert to talk more in details. For the average guy that's buying a property or even right now, what would you say scares the shit out of you about insurance?
Oh man, so the insurance market is unlike I've seen it in 15 years in Florida. It's the insurance companies. A lot of them have shut down. I've one carrier that shut down writing new business from Tampa all the way down to Naples. So basically, the whole west coast of Florida, they will not write any new policies. The other insurance company, I work with over 30 companies, so we got a good mix. The A lot of companies have shut down entire counties, zip codes. They're just tightening their belt on what they will take right now. So that coupled with the roof situation that we have, all these roofers going knocking on people's doors, saying, "Hey, I'll get you a new roof through your insurance company." It's put a lot of stress on the insurance companies in Florida. And so their appetite for new business with older roofs is shrinking, and just their appetite in general. I've a lot of these companies coming in telling me not to write a lot of insurance with them. They're just not wanting to write a lot of insurance. Now, out of the 30 companies we have, we will find an option for you. That's not a problem. It's just the a policy that was $1,000 last year is $1,800 this year. So the prices are going up. And their appetite is just shrinking.
Wow. All right, let's break that into two different things. Though, let's talk about roofs since we're on it. And I have experience with some of this, but I'm assuming it's because of these roofing contractors have an army of attorneys who are basically taking these projects on. They're suing the insurance companies, and basically people are getting free roofs. And this is why a lot of the insurance companies are opting out of insuring houses with older roofs. Is that
It's exactly right. So it's an assignment of benefits deal. And so what's happening is a roofer knocks on your door, says, "Hey, I can see some damage up there. Sign this paperwork and I'll get you a new roof through your insurance company." What happens when they do that, it triggers a set of wheels into motion. So now that roofer, after 72 hours, I believe it is now, that roofer owns the rights to that claim for your insurance policy. So even as the homeowner, if a month goes by and you're not happy with that roofer, you cannot cancel that claim. That roofer owns your claim now. And so what's happening is the roofer puts in the claim, the insurance company comes back and says they deny the claim, say, "Well, that's just wear and tear. You have an older roof, it's wear and tear. We don't cover wear and tear. Insurance is made to cover sudden, unexpected events." And so they deny the claim, or they say, "Well, we'll give you $2,000 to repair the roof, but we're not replacing it." The roofer says, "No, I don't want that. We want a brand new roof." So then they hand that assignment of benefits to their attorney. The attorney sues the insurance company. I've seen some of these claims go on 2 or 3 years, battling the insurance company for a new roof. What happens is, if the roofer or that attorney and that roofer get awarded 1 penny more than the initial offer from the insurance company pays all those legal fees for that roofer.
wow?
And then, depending on the difficulty of the case, the judge can pull a number out of a hat, 1 through 5. It's called a multiplier. And so say there's $25,000 worth of legal fees for that case, and the judge pulls a four multiplier out of there, then now you have $100,000 in legal fees. So the insurance company is paying $100,000 legal fees plus the brand new roof for this one claim. And it's killing these insurance companies. It truly is. I mean, that's why they're tightening the belts. That's why our rates are going up in that process. So what's happening now is, in a lot of situations, the insurance companies are just paying for a new roof, even if they don't think it's justified, so they don't go to court and have to pay the legal fees and all of that. So, right. My house, I have a 17-year-old shingle roof on my house. To the naked eye, there's no leaks. Everything looks fine. It looks fine. Someone in the insurance world, or if you get a roofer up there, they're going to find some damage on that roof. And it's the roofer and the attorney that work together to try to get to say, okay, this happened on a certain date when there might have been a bad storm in your neighborhood.
Right.
They have all on record, and then they find a way to get it, through litigation approved. And then that's what's killing the carriers.
So essentially they're just settling because they know if they go to court, they're probably going to lose a hell of a lot more money. So they're settling these cases, and now they're not taking on any new policies necessarily with older roofs, or if they do, they're probably paying a really high premium, right?
That's exactly right. So out of my 30 companies right now, if you have a shingle roof, an asphalt shingle roof here in Florida, out of my 30 companies, I probably have 3 or 4 admitted carriers that will take that, maybe a handful that will take that. Whereas, a year, 18 months ago, all 30 of them would have taken it, up to a 20-year-old shingle roof. The general rule of thumb right now is if it's an asphalt shingle, most of the most cost competitive companies want that roof less than 10 years old.
Less than how many?
10 years.
Okay.
And then with a tile or metal roof, they're wanting them less than 20 years old. So, whereas before it was 20 years on shingles and 40 years on metal and tile, they basically cut those timeframes in half. So it's just making it, can we still get it done? Sure. But the companies that will take a 18-year-old shingle roof, they're just, $1,000, $2,000 more. They're considerably more money than if you had a newer roof on that home.
We can always rely on attorneys to mess things up for a lot of people, right?
Yeah, I mean, it's they're great when you need them, and they come into play a lot of times and help a lot of people out. But there's a handful of attorneys that have this system down in Florida that are just getting rich. I think there's 40 of them in Florida, they say, that are just getting rich off this deal.
Kind of like extortion almost.
Yeah, I mean.
So if I'm looking to buy into Florida real estate, looking what to look for in a roof, I mean, you touched on it. Is there anything else? Shingle less than 10 years, tile, metal less than 20 years. Is there anything else that somebody should be aware of when they're buying a property to ensure that they're going to, for one thing, get the insurance binded and also at a competitive rate?
Yeah, absolutely. So the roof is the big driving factor right now in the insurance. So the newer the roof, companies are given age of roof credits. So even if you have a 9-year-old shingle roof versus a brand new shingle roof put on last week, that brand new shingle roof is going to be a more cost-effective policy than the 9-year-old. So they'll still take the 9-year-old. It's just the age of roof credit slowly disappears as the roof gets older. So the age of the roof is the big driving factor. Credit, you're in what they call insurance score here in Florida, has to do with your credit history. That's a big driving factor in the cost of insurance. Nowadays that can swing, the cost of the insurance $500 or more. So that's a big.
They're actually pulling credit?
Yeah, they are. Yeah. So they've been doing it on auto for a number of years. But most of the big companies these days they call it an insurance score. So it's somewhat related to it. I mean, it's related to your credit score, but it's also, you could have an 800 credit score, but if you have a lot of revolving debt and outstanding debt that you pay on regularly, it could still lower your insurance score. And so they've said that, it's kind of like the car insurance, is that the guy that has great credit, maybe dings his car in the parking lot, isn't going to go put in a claim through his insurance. Right. He's going to pay $700-800 to get the dent pulled out and just get it fixed. Whereas, the person maybe doesn't have great credit, that's struggling right now, instead of getting the car fixed, they're going to put the claim in, keep the $700-800 in their pocket to help pay their bills. Home insurance, kind of the same way. They found that people with less credit or not so stellar credit put in more claims for smaller stuff that still costs the insurance companies money. Whereas, the guy with great credits, a few $1,000s in the bank, gets a little water leak in his bathroom, he might just rip out the drywall and fix the flooring and renovate the bathroom at that time himself and not put it through a claim process. So they do credit. And then claim history too is a driving factor. Even if you've had 2 water claims on your house up north, because the water pipe froze and burst up there. You come down to Florida and try to buy a house. They do sometimes, some of these companies hold that against you because they look and say, well, what they're looking not only at the house itself and the condition and the quality of the updates in the house, but how frequent does this person put in claims? You know, are they a habitual claimer, or, you know, is this one in the past 30 years that they put in? So those are really the driving factors. As far as that goes, the age of the home is a big factor too right now. You know, if you're going to be living in this home, usually the cutoff is 40 years is going to be, you know, so 81 or newer. If your house is 1981 or newer, you're going to get a better policy and a less expensive policy than if the home is over 40 years old.
Even if it's been heavily remodeled or renovated, or?
So the key is, when I say a lesser policy, is the water damage coverage. So if your house is 40 years or older, most of these companies are putting a $10,000 limit for water damage on there.
Right.
So you have a pipe burst in your kitchen, it's going to limit it to $10,000. Some of those kitchen claims are $20,000, $30,000, you know, claims. I mean, they can easily get up there. So that's going to be that. If you repipe the entire house, replumb the entire house, and sometimes with some companies, it's just the supply water coming into the house. Some of them want the waste lines, you know, and that talks, you know, then you're chipping up concrete flooring and going through all that. But if you do all of that, then yes, they will give you full water damage. But unless the house has been completely repiped, majority of the companies are going to limit that water damage to $10,000 for homes 40 years or older. We do have some companies, Universal, who we wrote your home with recently.
Mm-hmm.
You know, they give full water damage. So, you know, it doesn't matter if the home's 50 years old, they're going to give you full water damage. So we do have options like that. On an HO3, a homeowner, the standard single family home, you're going to pay more for Universal in most cases, especially in Southwest Florida, than other companies that limit that water damage to $10,000.
Gotcha. And thank you for writing that policy, by the way.
You're welcome.
All right. So you mentioned, well, for people that really don't know insurance too much, now you're talking roofs, but that the policy is actually wind, hurricane, anything that would necessarily damage the property. You want to talk a little bit about that and in terms of what it really encompasses?
Yeah, absolutely. So, you know, insurance, a lot of people, when they buy insurance, they think that just about any and everything's covered, kind of like your car. I mean, the car insurance works a lot broader than home insurance. So home insurance, you know, you can drive your car into a tree on accident and you'll get your car fixed. But home insurance, if you're nailing something in the wall and you bust a pipe in your wall, that's not a covered claim. So with home insurance, a little bit different. Home insurance is sudden, unexpected events. Okay. And so, you know, natural disasters, lightning, hurricane, you know, fire damage, water pipe breaks in the house and burst everywhere. What it doesn't cover is slowing over time. Okay. So if your toilet is dripping water behind the toilet and you take a towel and you dry it up one morning and you notice it again a week later and you dry it up, and over time, you know, it's maybe stopped dripping out where you see it, but it's dripping behind the wall. And one day your drywall just collapses on you because it's been soggy and soaked, and behind there you got mold rolling up the wall. Most homeowners policies are not covering that in Florida, you know, because that's something that's been happening slow and over time. Even though it's been happening behind the wall and you haven't noticed it, it's still not covered. So that's the biggest headache that we get. Or if your roof starts leaking. So one of the more frequent roof claims we see are from tile roofs on homes with tile roofs. So in the valleys where those roof connections meet and they have it sealed, water gets behind those tiles, leaks down back there, and the valley fails over time. And then all of a sudden water starts dripping in the house. So when they get up there and start removing the tiles, the plywood is all rotten up there. And so that doesn't happen, you know, overnight. That happens over a course of weeks and months. And that's not a covered claim. It's just not, you know, that's something that's slowing over time. So you got, so as far as what it covers, it's sudden unexpected events. The most frequent claim we see is a water pipe breaking in the house. It just is. Wake up in the morning and there's an inch of water on the floor out in the kitchen or the bathroom. And so a fitting has failed, or in Florida, we have copper pipes in these older homes. And so those copper pipes and the water that we have here in Florida is corrosive on it. And all of a sudden they'll just fail and have a pinhole leak that is pressurized, and water will roll out all day, all night, whatever. So that's the most frequent claim that we see. And one of the more costly claims that we see. Those things can get fairly expensive. So that's why with these older homes, the $10,000 limit, I mean, that could be a bathroom claim. Your bathroom claim can easily exceed that. So that's why I'm saying with these older homes, if you're looking at purchasing a home, anything 81 or newer is going to be in your best interest.
Got it. You mentioned some people's policies from last year to this year, going from $1,000 a year to $1,800. I mean,
yeah.
Is that a typical increase that you're seeing kind of across the board?
I'd say the average increase this year for most homes is around $250 to $350. That's average. I've seen some of them go from $2,500 to $5,000. I've seen them double, overnight. So some of these not these. So we have two different types of carriers in Florida: admitted and a surplus lines. Admitted has to play by the state's rules, and they have to apply for a rate increase with the state. And the state has to say, okay, show us why you need this increase. And the state can say, okay, the insurance company might say, we need an 18% increase this year. And the state might come back and say, well, you didn't prove an 18%, but we'll approve a 12%. So those admitted carriers have to play by the state's rules. And so the state kind of caps them. Now, if they're warranted a 30% increase, the state will give them that. So it has to be all approved. The surplus lines carriers are what I like to call the wild, wild west of insurance. Okay. And so it's in Florida. They don't play by anybody's rules. So if they wanted to take 100% rate increase the following year, they can do that. They can offer you higher deductibles than what a standard policy would come with an admitted carrier. They don't have to play by any rules. They can just come in here and sell you insurance.
Gotcha.
So with those companies, more so I've seen those companies double, triple in cost from last year. Most of the admitted carriers, I would say, on average is about $250 to $350 increase this year. But I have seen some of them go up $1,000 or more on policies too.
And I know we're getting calls because they're getting inquiries from their lenders saying, hey, we need you to either cut a check for the bounce because your insurance is increased, or we need to recalculate the amount of escrow that they're taking each month, which will increase their payment. I'm sure your phones are probably blowing up over there. What kind of feedback are you getting from people just freaking out?
Yeah, it's part of the nature of my business to be honest with you. I mean, 3 years ago when policies were going up $60 or $80 a year, we would still get those calls. No one likes to see their insurance go up, especially when a lot of people have never made a homeowner's claim in 30, 40 years of their life of owning a home,
Yeah.
So we're kind of used to those calls. But yeah, I mean, it's, people are, calling us now. Obviously, we're shopping a lot more on the renewals. When it goes up $30 or so, we typically don't shop those policies at renewal. We will if you want us to, but typically there has to be a certain threshold of increase. So usually, 7-8% before it triggers us to start shopping it for you. But we're getting those calls. A lot of people are making changes to the policy, believe it or not, and how they're insuring the contents of the home is the biggest thing that they're doing. So, when we insure your home, you're calling us, we're insuring your home. We're insuring the house. The pool cage is something that is not included in most of these policies. If you have that structure over your pool to keep the bugs out at night, that is most rejected on most policies. So when you call us, we make sure we put that on there, the screen enclosure, the water backup coverage, everything to protect your home properly. But to help keep the cost low, there's something you can do as far as the contents of the home. So that's your clothes, furniture. What I like to say is everything that you're moving from that moving truck when you move into that home, everything that those movers or you carry in from that moving truck into the home is personal property. It's contents coverage. And so a lot of people are choosing to insure that at actual cash value these days. So old for old, not old for new.
Right.
So, no depreciation. So if you have a 10-year-old couch that burns up in a fire in the house, when you go to replace it, they would say, well, your couch is 10 years old, a new one's $2,000, and they depreciate at $100 a year. So we're going to give you $1,000 instead of giving you $2,000 to replace it. So a lot of people are doing that, on the East Coast of Florida, that can save you $700, $800, $900 a year on your policy. So people say, well, I'm worried about the house. If I got to replace a bed or a couch or some clothes in the event something happens, I'll take that risk, and that's what insurance is betting against yourself. You're taking that risk versus, the risk that you want to take. So a lot of people are doing that to help reduce the increase. Over here on the West Coast, that's a $200 to $500 difference, on the policy. So a lot of people are changing that just to keep the policy a more affordable level. Gotcha.
Why is it so much more money over on that coast?
I think that's, the East Coast is I think more, in hurricane models is more likely to be the brunt of the storms as they come off that coast of Africa. So, I got over 30 companies we write insurance with, what they call the Tri-County, the Miami-Dade, Broward, and Monroe, which is the Keys down there. Out of those 30 plus companies, I really don't have anybody that are insuring homes down in that area. It's called the tip here. Yeah, because it's just, the Citizens, the state-run insurance. We do write some down there with them. But it's the tip of the spear. And so that area, and just the being the brunt of, if those storms come off that coast, it's going to get hit the first and most direct. Lately the storms have been kind of going around the tip of Florida and coming coast there. So we're still at risk over here. It's just that they feel those big category 5s that can come off there and can do some serious damage, and they just don't want all their eggs in a basket down there. And I'm sure it has to do with the cost of reinsurance. So all these insurance companies we write with, they're not using all their money if a storm comes. They buy insurance. They buy reinsurance from companies like Bermuda Insurance, Lloyd's of London, those big companies like that. And so, Universal, like the company I have you insured with, if they, I don't know, and I'm just making up numbers here, but they say, well, if we have a hurricane this year, we only want to pay $30 million of our money. And so then anything above 30 million, after they pay the 30 million or whatever that number is, then Lloyd's of London, Bermuda Insurance come in and pay all the rest of those insurance claims. So part of the reason why our insurance rates are going way up is because of the storms we've had recently, or natural disasters anywhere in the world, because those Lloyd's of London, Bermuda insurance companies insure insurance companies all around the world. So whether it's a tsunami in Indonesia or a earthquake in another part of the world, if those companies reinsure those insurance companies over there, it's all coming out of the same pot. And so, especially when we have storms that hit Florida, their reinsurance costs go up, which causes Universal and all the Florida insurance companies' costs to go up, which gets passed down to us. Gotcha. So they're like the top dogs. Yeah. I mean, they're people with more money than know what to do with, for sure.
What about I know FEMA has been changing around the flood maps. What's the projection on that? Can you give us any insight of what's going on there, and can we anticipate rates increasing for flood insurance?
Yeah, so as much as doom and gloom I put into the home insurance market in Florida, it's not as bad as it might seem coming through the video here. Is that we write a lot of insurance. Last month I think we wrote close to $400,000 worth of insurance. So we still writing a lot of home and auto insurance in Florida. It's just some homes are harder than others. The flood insurance is the thing I'm worried about, to be honest with you. Especially for investment properties. If you're going to be renting that home out, that has changed drastically in the past few years. And with this new rating system and the flood insurance, it's in the coastal counties where we're located, it's only going to be worse. So the new rating system came out on October 1st of this year. If you have an existing flood policy, you're grandfathered into it until it renews. If it renews between October 1st and April 1st of 2022, you're grandfathered into the old rating system. So you're going to see an increase, won't be too bad. After April 1st of 2022, everything that renews after that is going to be entered into the new rating system. The new rating system does not require an elevation certificate. So in the past, we as insurance agents used to ask the real estate agents or the buyer, if the home was built pre-firm, which was built prior to them mapping that area into a flood zone, we didn't need one. But if it was built after that home was built after that area was mapped into a flood zone, there was no way for me to quote you a national flood policy through the National Flood Program without having an elevation certificate. That's no longer the case. So I can quote any home, any year construction, whether it's been in a flood zone or not, without an elevation certificate these days. An elevation certificate will help if it has a positive elevation on the home, but I don't need one. So what they're doing is they're using new data to look at the basically the elevation of the land all across America and third-party resources to rate the risk of that home flooding. Okay. Give you an example, down on McGregor, I had a home that was closing. The flood insurance was going to be $700 a year. The closing got delayed. It got into after October 1st. That same flood policy went from $700 to $1,800 in cost. Wow. Coverage, same, I had the elevation, everything, but just the new rating system made it jump up that much. I had there's no more quoting flood insurance if you're in an X flood zone, which like my home is in. So my mortgage company does not require me to buy flood insurance. There's different flood zones in Florida. An X flood zone is one that they feel like you're not in a high enough risk to need to secure the loan with a flood insurance policy. Okay. Everybody that called me in the state of Florida, 3 months ago, that said, how much is flood insurance in an X flood zone? For the maximum coverage, it was $572 a year. That was what the rate was. So I could look at a X flood zone and I could tell you what your flood insurance cost was going to be. Nowadays, the flood zone doesn't matter. It's the elevation of that property that you're on. So I've took one in Merritt Island that was $572 in an X flood zone. Again, closing got delayed, but she wanted flood insurance. It went to $7,700 a year for flood insurance and an X flood zone, which, just based on that new rating. So the flood insurance is what makes me nervous with that new rating system. It's the rates are in the coastal counties much higher. Now, the guy in Orlando in the middle of the state that was $572 in that flood zone, he's probably $300 now. So while it's going to help some people in the middle of the state reduce their flood insurance cost, in the coastal counties, I've seen nothing but it go up. And wow. And what's happening with the investment properties on those flood policies is that when it's an investment property and you're renting it out and living in that house less than 50% of the year, so if you rent it out or just live there less than 50% of the year, they hit you with a huge surcharge, and that's what's causing the investment properties to go way up. So the new rating system and that surcharge you're going to get hammered on it. So the 1979 home that's an investment property in a flood zone, whereas it was going to probably be fairly expensive to begin with, $1,500-$1,700 before. You're screwed. Is going to be up, $3,000, $4,000, $5,000. It's going to get expensive on you. So the flood insurance I'm more worried about than anything else.
So what are they doing? Digitally reviewing the topography of the entire United States and saying,
yep.
Hey, you all fall into this bucket?
It is, it's the way they're rating it is through third party sources. So, all of these surveyors that are taking, the flood elevations and all of this information, I'm sure there's a company out there that's compiled all this data about the topography, like you said, and showing low lying areas and the higher areas. So, your neighbor at the road that's sitting up on the at the end of a hill could pay, it be in the same flood zone. He could be sitting up here that pay a heck of a lot of insurance than if you're at the end of that hill, in that low lying area. So it's exactly what they're doing. It's the reason why they don't need elevations anymore to rate the insurance.
Wow. So if somebody wanted to preliminary do research, especially if they're intending on buying any property in Florida, is there a map or a website that we could lead them to so they can do their own kind of research on that?
Yeah, so FEMA has, if you go to the FEMA website, there's flood maps on there. To be honest with you, the best way to get an idea of what you got going on, shoot me an email. You shoot me an email, give me a call. Hey, Scott, I'm looking at this property. Give me the property address. I can throw it in there and say, okay, here's what it is. Here's what the cost of if it's in a flood zone. I'll tell you, if it's in a flood zone, that if you're getting a mortgage, you're going to need to buy the flood insurance or not. And then two, I'll be able to give you a price without, having any elevation certificate. Elevation certificates, $300 or so. So I can tell you without having to get one of those. And then I can also tell you, if that home has a positive elevation of 1 foot, then here's what it would be. If it has a positive elevation of 2 feet, here's what it would be. And if it has a negative elevation, then we wouldn't use the elevation certificate. We would just go off their initial quote on it. So that's going to be the easiest way. There are some flood maps out there that tell you what zone you're in and all that, but you're not going to be able to get a rate based on it,
right?
Unless you're an agent, and do it that way.
Gotcha. I think the last thing that I have is what's your take on, because Michael Burry from The Big Short, where he basically shorted the secondary mortgage market back in the last recession. He was predicting that insurances across the United States are going to increase. Are you hearing anything from some of your colleagues that are in other states, kind of a similar trend of an increase in rates?
Yeah, so absolutely. So a lot of the companies I write in a lot of the coastal states in the country. So, Louisiana, Texas, North Carolina, South Carolina, all the way up to Massachusetts. So a lot of the companies I write in other states, they're going up because, that storm we had just a month or so ago up in Louisiana, they're going to cause their rates to go up. The fires in California causing those companies to raise their rates. So, any of those natural disaster states, you're going to see those rates go up because of the reinsurance cost. Ultimately, all these companies are buying that reinsurance, and when they're going to raise their rates when those natural disasters go up. So, Texas, they're all going up, unfortunately, in that scenario.
Gotcha. And then I think my final question for you, and I know you're a busy man, got to move on and write some policies, but on this channel, I talk about reasons why I think we're going to see more inventory come to market. What's in your experience and professional opinion, do you think that the insurance rates are going to cause some people that are kind of strapped with money and paycheck to paycheck to go ahead and list their properties, or what's your take on it?
Yeah, I think that's gonna come into play. I think the real thing, I think it's not gonna be the home insurance side of things, because home insurance goes up, $600 a year. That's $50 a month, right? For your escrow is gonna go up, if you're escrowed and stuff. So that's not gonna make or break a lot of people. But the flood insurance properties, I think that's gonna be the sticker shock, man. The condo that we insured for you prior to the new one, your insurance was $480 for that flood policy, right? Just to cover in the contents of that condo. I quoted it for the gentleman you sold that to, and it was $2,500 for that same policy.
Wow.
Because of the new rating system. And that house is right there on the beach. So it's ground zero, right, for flooding.
Yeah.
So I think what you're going to see is the flood insurance is going to get people to list their home, especially people that are right on the water, that, those low-lying flood zone areas. After that April 1st, 2022, we're going to see what those policies jump to. And it's going to cause some people to say, it's been nice living here for 20, 30 years. But when the flood insurance goes from 3,000 to 12,000, they're not going to do it, or, hopefully they have the mortgage paid off and they decide not to buy the flood insurance and go that route. But yeah, I mean, listen, we're in the most beautiful part of Florida. I've lived here my whole life. I don't see a slowdown in the housing market here. And I don't think the insurance is going to chase people away. I think it might chase certain groups of people away that, don't like to pay that much for insurance or have to get a mortgage on a waterfront home. It might push them more inland, so they're not in a flood zone. But I think it's not going to keep people from moving here for sure.
Well, good info, man. We packed it in. I appreciate all your time on this. I would say to anybody that's watching this video too, obviously we're going to put Scott's information down below as well as his website, so you guys can find all of his information. Feel free to email him with any questions regarding policies or if you guys need any quotes. And also comment below if you guys want to see Scott and I do another video on anything else pertaining to insurance, because I think that we covered a lot today, but I think that there's a lot more that people need to be educated on, including myself, on insurance. And it's kind of an ever evolving part of the fundamentals of real estate that I think we all need to be up to date on. So Scott, man, I appreciate your time today and thanks for being with us.
Yes, sir, Steve. Appreciate you, man. Have a good day.
Thanks, brother.